Welcome to the Pier 150 webinar series. I am Mike Kaiser, co-founder of the Pier 150, and today I'm joined by Anita Ward, the Chief Development Officer at Salary Finance, Brian Tippins, the VP Deputy General Counsel at Hewlett Packard Enterprise, Aaron Harding, Managing Director at PwC, and Jenny Flores, the Head of Small Business Growth Philanthropy at Wells Fargo. Thank you all for joining us today.
Thank you for having us.
Just a few quick notes. You can go to our website, thepier150.com, click on the webinar series tab, and see all of the past and future webinars that we have scheduled, along with links to recordings if you happen to miss one. This session will be recorded, and it will be sent to you in an email link and posted on our website as well if you happen to miss it. Also, a quick note about our upcoming events. We are running a regional virtual roundtable series. These events will be hosted by the meetings platform in Zoom. And they're a great session where you can talk interactively with your colleagues. We had our Chicago launch event back in September. We had 55 executives show up, discussing topics and also in smaller breakout rooms. So if you are interested in that format and some of the sessions we have, I think we've got our first one kicking back in next week in New York. Sign up for those, and those, even though we'll be focused on regions, are not regionally exclusive. So if you're in a different region and you want to join one, please go to the website and sign up. Finally, just a quick note on the Zoom platform. If you would like to ask a question of the panel as we go along, please use the Q&A section. Within that Q&A, you can upvote certain questions. If you see one that you would like answered, those will bubble to the top, and I will get to as many of those as possible through this session. So thank you all again for joining us today. And just like to start out with just a quick introduce yourself, a little bit about your background, organization, and role. So Anita, let's start with you.
Great. Thank you so much for having me today, Mike. It's a pleasure, and I'm honored to be on this panel with friends and colleagues that I greatly respect. I am the Chief Development Officer for Salary Finance. We're a fintech that's driven by social purpose. So your topic of financial inclusion is near and dear to our heart. Our goal is in the next couple of years to move 10 million Americans from debt into savings and try to get a footing around financial well-being. So thank you for including us today.
Thank you, Anita. Brian.
Sure. Thank you for having me. So I work for Hewlett Packard Enterprise. Hewlett Packard Enterprise was born out of the separation of HP into two net new publicly traded companies a few years back. We're sort of an enterprise edge to cloud company. And in that company, I got an email today, Mike, saying congratulations on your 20-year anniversary. So I've been with the company for 20 years as of today in various roles. I spent a time in our real estate department, our procurement department. I spent about 5 years as our chief diversity officer looking after inclusion and diversity in our global workforce. And now, while I've got a legal title, I look after a number of our social justice programs, as well as our supply chain diversity program, which is all around increasing spend with underrepresented businesses around the world. So happy to be part of the conversation today.
Thank you, Brian. Jenny.
Good morning, everyone. I'm Jenny Flores. I'm the head of Small Business Growth Philanthropy with Wells Fargo. Our mission within the foundation is to ensure that we're providing opportunities for economic inclusion and economic empowerment of low-income and diverse communities. I focus on small business growth, working with the business to ensure that we have really catalytic systems change strategies to support the growth of businesses who often have a lot of hardship and obstacles in, both starting up and growing. So look forward to sharing some of our learnings and insights.
Thank you, Jenny. And Aaron.
Thank you for having me as well. I'm Aaron Harding, Managing Director at PwC in our Employee Financial Education and Wellness practice, where my colleagues and I help employees of our clients understand their personal finances a little better, figure out how to get from where they are to where they want to be, and then help work them through that process as they're trying to get there. I'm also co-author of our annual Employee Financial Wellness Survey, the 9th edition, which came out earlier this year and can be found on pwc.com. And if ever there was a time for me to say it, this is a topic that I am extremely passionate about, and all opinions are my own.
That's fantastic. Well, this is a topic, I think you kind of, Aaron, you led right into the kind of the opening question. This is a topic that maybe isn't at the forefront of some folks that are looking at the virus and remote work and a lot of other things that are happening in organizations. But it is a topic that's extremely relevant right now. And I just thought we'd start out by getting each one of your perspectives on, why does financial inclusion matter, and why does it maybe specifically matter right now? And Jenny, let's start with you on your perspectives on, why does this topic mean something?
Yeah, I would say for me, financial inclusion, just to set my understanding, is that individuals and businesses have access to products and services that meet their needs. They're affordable, they're accessible, and it allows them to plan their financial future and achieve their goals. So it is incredibly important for everyone to have equal access, because when they don't, it is very problematic. It creates a lot more hardship. It exacerbates the wealth gap. And I will give you an example of why that really matters. In 2020, when COVID hit, small businesses were closing at very rapid rates. Between February and April, 41% of Black-owned businesses closed. That's 450,000 businesses that closed. The government responded. The Paycheck Protection Program launched, over $600 billion worth of funds that were available. Unfortunately, 91% of minorities and women-owned businesses did not access PPP. Why? Because banks set up the program for existing customers. You had to have an account, a credit extension, so they could easily process the loan. Since you could not go into the branch and have the traditional process, we had to run on the back end. We had to have the customer be an existing one to facilitate that. If you didn't have a bank account, you didn't have an extension of credit, you could not access that fund. So it just created a huge gap between those who could access the resources and get support and those who couldn't. So I think financial inclusion on a day-to-day transaction has impact, but when there is a devastation that happens, it magnifies it. So we are seeing that today. And I think this topic, I'm so glad you're addressing it, because it's very important that we address it and find solutions for that, for bridging that gap.
Thank you, Jenny. And Aaron, your perspectives on why this matters right now.
Sure. I think it matters simply because a lot of the civil unrest that we've been seeing in this country for the last several months is driven by a sense of frustration. And that frustration is with the system. And a large part of the system is going to be the financial implications of decisions that are made by the individuals who are guarding the system. And so when you think about it, for example, everyone wants to pursue the American dream in the United States. And the challenge with that is that if you are a person of color or Black in particular, you have a higher likelihood of being denied a mortgage, for example. You have a higher likelihood of paying a higher interest rate. You have a higher likelihood of paying higher fees. And when you're facing a system where the deck is a little stacked against you, it makes it difficult for you to, one, believe that you can achieve the same dreams as everyone else, and two, to hop over all the barriers that come your way as you're attempting to work through the process and achieve the financial vision that you have for yourself. And so for me, as we look at this time that we happen to be in, it is the perfect time while everyone is focused on the differences between us all and also the similarity, to start highlighting the fact that there are some economic differences that are having an impact on us as a nation, and that once we heal those, we have a much better shot of having a much stronger relationship between all Americans, so that we can all feel like we can achieve our financial goal.
Thank you, Aaron. Brian, your thoughts around this topic?
Yeah, thank you for that. I should have taken a page from Aaron and say I'm also very passionate about this subject, but also my opinions are my own. So I appreciate you saying that, so we can say whatever we want to say in this setting. I completely agree with everything Aaron said and Jenny said. It's a kind of working backwards. The current environment that we're in has certainly exacerbated a lot of which already existed, right? And so all those things that Jenny mentioned about access to the loans and the infrastructure that's been set up to support businesses is disproportionately affected communities of color. I say, you hear people say, we're going to get out of this. And I think we are going to come out of this period at some point, but we're not all going to come out at the same pace and in the same way. And for a lot of communities of color, we won't have that job to go back to because the store is now closed, or the restaurant's closed, or the factory has less staffing, right? And so I think we're going to see long-term impacts. Hopefully we'll have a vaccine, return of some level of normalcy, but I think communities of color when it comes to access to financial inclusion. I think we're going to have to move on to the next normal for all the reasons that Jenny mentioned. But I would say, kind of to Aaron's point, we're dealing in a situation where things were not great coming into pandemic, right? I spent some time at the World Economic Forum in Davos in January, just before all of this broke, and we spent a lot of time in discussions with many corporations and governments around the world talking about the future of work and the future of skills, talking about the extent to which technology, automation, machine learning, artificial intelligence is going to forever change kind of the workforces of the future, because a lot of those jobs that where Black and brown people over-index today won't exist tomorrow, whether you're talking about food service workers or truck drivers, or the list goes on and on. And so I think even pre-pandemic, we were dealing in a situation where the situation of financial inclusion was already looking more bleak for communities of color. Then comes pandemic, which kind of further exacerbates the situations that we're in. And so I think at no time has it been more important than now to be having these types of discussions at all levels.
Thanks, Brian. Anita, your thoughts around, why does this matter right now?
Sure, I could just say ditto, ditto, ditto across the board, but I'm going to take a little bit of a different position in the sense that theoretically, financial inclusion should matter now more than ever. And if you listen to the news and listen to everything that the four of us are passionate about, then you would think the data's here, the data support it, and that 2020 has kind of created this maybe sort of perfect storm for employee well-being. Daniel Shukani, one of our founders, shared with me most of what he saw at Davos this year as well. And mental health, financial health, physical health, new ways of work, all were high topics. And you would think theoretically, again, that in 2020, because all of this was negatively impacted, that employee well-being and financial well-being should matter and would be a topic. But I can only think about, you titled this the Surviving to Thriving in the Illusion of Inclusion. And I think sadly, 2020 is a bit like maybe the emperor's new clothes for inclusion. So we gush over the fabric and all of us are like, yeah, this is the time. Look at the wealth gap. Look at the issue. And all of us said, this is super exciting because COVID placed this magnifying glass on all types of inequities. Things that I know for 20 years, Brian's been championing, I've been working on, here's this giant magnifying glass that says, okay, employers, communities, government, we're forcing you into new territory. So planets aligned, perfect storms aligned. The problem that I'm seeing is that in our world, we bring our programs in and scale them through the workplace. So now all of a sudden, HR teams have to step back and say, oh my gosh, how do we figure this out for employees? We've got to figure out new healthcare programs. We've got to figure out benefits we've never heard of. And now all of a sudden you layer on financial well-being. What is that? Is it curriculum? Is it coaching? Is it bank accounts? Is it loans? Is it all of these? And to, Aaron and Brian and Jenny's points, yes, it's all of them, but it takes effort. It takes effort to figure it out. It takes effort to understand what are the implications of all of this. And, when 67% of your employees are saying they're experiencing financial stress, then as an HR professional, you're saying, oh my gosh, it's time to take action. But I don't think that the discussion around financial well-being has actually made it to the forefront of conversations in organizations. And where it has, I think there's confusion because I'm a reformed banker, Jenny, so I know we speak a different language. And so sometimes HR's got to now interpret what all of that means. And so, yes, it should matter now. But again, I think the emperor is a bit naked in what we're doing about it.
Thanks, Anita. And Aaron, I want to talk a little bit about what Anita alluded to is that, this may not be at the forefront of a lot of organizations and a lot of executives in HR. They may not fully understand it. I want to get, again, just kind of that baseline thing. Your perspective is, why should an HR executive put this at the forefront? And what is the benefit to the company when you create financial inclusion for your employees? What exactly will you see as a result of that? Can you just give me your perspective on that?
Sure, that's a great question. And I think that I have to disagree a little bit with the premise that HR leaders aren't aware of this, because I think that many are. I think the challenge becomes in the hyper-competitive environment that we work from a business standpoint. There is always a drive to provide ROI, and the ROI on financial inclusion isn't very easy for us to recognize. So it's not as easy as saying we create a widget for this many dollars, we sell it for that many dollars, and therefore we have a certain amount of profit. But I think that organizations are starting to see that they've been really good at D, but not in I, when we think about the D and I equation. They've been really good at getting the right numbers of people within the organization, but they haven't done as well with making them feel included. And when we look at that lack of inclusion, we see that there are impacts throughout an organization. So not only are there, of course, the impacts to morale. Morale has an impact on how hard someone is willing to work for their employer. How hard they're willing to work for their employer is going to have an impact on their productivity. Their productivity then hits the bottom line. So that chain effect of not having as much I, especially as it relates to the financial side of things, is something that does in fact have an impact on the organization's bottom line. It's just kind of difficult for us to measure that. Additionally, when we think about what some of the things that we learned through our employee financial well-being survey, we hear from employees that they are completely stressed when it comes to their finances. And we know that through subsequent surveying that level of stress has increased even more so as a result of the pandemic that we're all in. And like Brian mentioned a little while ago, jobs are not there for many of the family members, even of those of us who are able to maintain a job during this period. So it comes down to, I'm feeling stressed. And if I'm feeling stressed, I go to work feeling that stress. I'm thinking all day long about those things, 3 hours a day on average for many of the people who respond to our survey. And if I'm thinking about all those financial stresses that I have to deal with, then that's making me a less engaged employee, a less productive employee, a less healthy individual. And all of those things, again, come back to my bottom line as an employer. So again, when I think about why HR professionals should care about this, it's because there is a business imperative to including all of your employees financially on an even or equivalent playing field, so that they can be as productive as you'd like for them to be and increase the bottom line of your organization as well, which again is something that we've seen through some of the statistics that have been out there.
Yeah, Mike, can I add something to that? Because Aaron's right. I mean, when you just calculate presenteeism, absenteeism, productivity, you can actually calculate out about 13 to 18% of your annualized salary costs. But I think there's also another component of that. It's the mental health side of it as well. So employees who are under financial stress are 11 times more likely to have sleepless nights. They're even 9 times more likely to have troubled relationships with their coworkers, and depression and anxiety are also set in. So when you take the mental health cost, that also has an impact on physical health in terms of stomach ulcers and high blood pressure. And there are some very interesting correlations across data that say that financial stress is causing things that you're not even seeing. So the implications to rising healthcare costs at some point also have an origin back in your financial stress. And then when you look at that across, your populations, sadly, your most vulnerable populations are the biggest component of that 67% that are stressed. So I think it has a much broader implication across the board when you're making that ROI.
I totally agree. And I think it goes to sort of a bit of an inflection point that we're in. To Aaron's point, that's not all net new. HR professionals have been thinking about these things for a while, but it feels like we're at a bit of an inflection point because it's blurring of personal life versus business life, and the extent to which corporations, employers have to be thinking about that holistically, whether they have an obligation to or they see competitive advantage in doing so. And so I'll give you a couple of quick examples just here in the wake of the murder of George Floyd and the current environment that we're in, I worked with some colleagues to put together a couple sessions for our team members inside my company. One was on allyship, because a number of our team members around the world want to be a force for good and want to contribute, but don't know the words to use and how to be an ally. And another session was for our African-American Black team members around mental health and wellness in the current environment. And while most of the feedback I got was very positive, thank you for doing that, I really needed that, there was some who said, I don't think my employer has a say in how I'm feeling or my political views or any of that. And those are the corner cases, but I think it's much more the case now that people are seeing that our employees, our team members, don't leave their fears and apprehensions at the front door when they walk into the building or when they get on that first Zoom call, right, in the current environment. And that we've got, whether again because of sense of obligation or because we recognize that it's a competitive advantage to be thinking about our employees' well-being holistically, particularly when I come and speak from the lens of tech, right? Highly competitive advantage, highly competitive environment rather, and we're always in the search and a fight for the best and brightest talent. And we got to be thinking about these issues of financial inclusion, of mental health and well-being when we think about what we offer to our team members.
Thanks, Brian.
Well, if you, what about with, I mean, like, what's that implication look like, Jenny, when like small businesses are our backbone, and aren't those usually, for the most part, just individuals or sole proprietorships? And there's not an employer who can lean in around that, and like an HP or a, you know, or
Right.
Wells Fargo. What does that mean to you guys? What's that look
I
like?
would say, particularly in the context of, you know, access to financial inclusion, when we consider small businesses and you break it down by ethnicity, over 90% of businesses owned by Black and Latinx are actually what we consider micro. So they're under 100,000 in annual revenue. They are mostly sole proprietors or have less than 5 employees. They're kind of bootstrapping their businesses. They're accessing their friends and family for capital. If they have access to 401k, they draw that down and use that. They're not traditionally going to the banks to get finance that way. So when you think about the fact that they're undercapitalized, the opportunity to offer all of these services becomes that much more difficult. But it's not that they don't want to. We just did a survey. I work with a nonprofit called Savor Life. Savor Life was started with this idea that over 50% of Americans do not have $400 in savings to weather a financial shock. And we knew that $400, if you can get someone to save $400, it can prevent them from losing their job. It can prevent them from being foreclosed on their home. So that was the premise. We're going to help millions of Americans save $400. That is a good safety net. We, when COVID hit, I gave, through Wells Fargo, we provided $1 million so they could support entrepreneurs who needed $500 savings boosts, because we knew that was a magic number. As we started giving these dollars to entrepreneurs and their low-wage workers, what we saw is that they understood the value of that. The morale went up, the loyalty went up. Families could, afford to stay housed. It is an incredible opportunity to think about using small business as a lever for financial inclusion. We need to provide them with the tools and the services and think really broadly about that ecosystem, because it's very vulnerable and we could do a lot of good if we could figure that question out. So we are at Wells Fargo, we're working on it. We're just starting very kind of small scale to learn and test, but I think that is the next avenue if we want to support vulnerable communities, that is a perfect avenue to drive impact through. They're connected and they're hungry for it.
Thanks, Jenny. Aaron, talking about the financial inclusion that organizations, might want to implement, taking it from the employee perspective, that can be maybe something that's taboo. I think things are opening up more in organizations where folks are saying, hey, this is kind of a holistic life I have where work is part of my, social life and the whole thing. But it can be an extremely difficult conversation to go to your employer and say, hey, I'm having financial problems. I'm having financial stress. And thinking that the organization is going to do anything about that. A lot of people say, hey, that's my problem, right? You're paying me a salary, you're giving me these benefits, yet I'm still not satisfied, or I'm still not doing well. Can you talk a little bit about, what are some things that you can suggest as to how to encourage employees to come forward with those kinds of things and feel comfortable with having those kinds of discussions?
Sure. I think I will say this in advance that I am really biased on this one just by virtue of what our practice does, because employers bring us in specifically so that they don't have to have those conversations themselves. in part because they may not want to have some of those conversations from a liability standpoint. And so they want to make sure that there's someone else who can have those conversations. And then the other part is that they don't know how to have the conversations. There are very few of us who grew up in a household where we learned about money and developed good habits over time. For the vast majority of us, we graduate from high school or college, we get a job, and we start spending money without ever having learned anything formally about personal finance. And so when someone goes to their employer, particularly in their HR department, which is where a lot of those conversations used to initiate, they would find that the HR professional didn't know much more than they did when it came time, in terms of their personal finances. So what can an employer do to make it easier for someone to have that conversation? The first thing is make sure that it's not taboo to have conversations about your finances in the job and in the workplace. And that includes making sure that people have access to particular education around those things and make it easy. One of the very simple thing that we did at PwC relates to messaging. We used to have a workshop called Cash and Debt Management, which cash and debt management is a great thing. It's a foundational thing that we should all learn about relative to our personal finances, but it's not something that people necessarily want to raise their hand and sign up for. I need to learn more about, managing my cash and my debt. So we changed the title of that workshop to Managing Your Money. And it became more open, it was more inclusive, allowed people to come in, even when the content didn't change significantly from when it was called Cash and Debt Management. So making sure that there are educational opportunities out there for individuals. I'm a firm believer in coaching, again, by virtue of what I do. I think that if we play a sport, if we pursue a hobby, we always have people who we can turn to who can help guide us along because they have been there or they have studied what it is that we're trying to do a lot more than us and can make the road a little bit easier for us. Without financial coaching, we're left to our own devices. And I think I noticed a question come up in the chat function, actually. A person asked earlier, well, how could a bank charge people of color a different interest rate for a similar loan? And I won't say that it's necessarily the bank itself in many cases, but I'll share this with you. Earlier in my career, I was a mortgage broker in Massachusetts, where I lived at the time. As a mortgage broker, I had relationships with banks where they would tell me what their rates were, and then what I charged my customer was completely up to me. So I knew other mortgage brokers. There were some who would charge a little more so that they could, take care of their expenses and afford a lifestyle for themselves. And there were some who would charge a lot simply because they could. So it's not necessarily the banks themselves, it's the system, again, that provides opportunities for people who are not informed to be taken advantage of when they go out to be consumers. So education around what it means to be a good consumer, having a coach who you can call and say, hey, I'm experiencing this, I'm going through this situation, I have this particular financial need, what can I do? I think that those are things that any organization can implement should they choose to. Now, the downside of that, unfortunately, is that in this particular environment, there are so many solutions out there that it's extremely difficult for an HR professional to say, okay, I want this one, this one, this one, and this one, because there are 300 or 400 financial well-being solutions that are out there for them to choose between. It makes the job tougher for them. So I think that in trying to provide that help for their employees, the first thing they do is start with something that's tried and true, like coaching, like a digital solution that's holistic in nature and allows people to learn a little bit more and do a little bit more in all areas of their financial lives. And then they can figure out the rest as they go along. I think employers would be advised to not think that they have to have an entire solution in place on day one, because there are cost implications to that. There is the potential for employee fatigue. If you give them so many things at once, they may not be able to absorb it all. They may not get it all. They may not be able to identify what's most relevant for them. So again, I think that having some strategy around what they're willing to offer to their employees, starting with the most basic components, is one of the best things that an employer can do to make it easier for employees to raise their hand and say, hey, I'm experiencing this particular problem and I need help.
Thanks, Aaron. Brian, interested in your thoughts around that topic as well on how you can facilitate those kinds of conversations. And Jenny, did you have a comment quickly on that?
Yeah, I'll wait, I'll hold it, but I wanted to address the issue of products and education because it's absolutely, he hit the nail on the head. But Brian, go ahead. I'll hold it.
Okay.
Yeah, all I can say is ditto to everything that Aaron said, because there's certainly, in the same way around mental health and wellness, we as corporations have to think about how we position this, because some of the language that we use can bring some necessary stigma, and employees may not be apt to kind of raise their hand and ask for help unless we create that environment of openness. And so I think it's very critical, as Aaron mentioned, the simple change from cash and debt management to managing your money and taking away some of that stigma is incredibly important. And so it goes beyond, I think, many corporations, many employers have kind of the base, right? We've got the access to the financial counseling through the credit union, or, the occasional lunch and learns, but it's going beyond that to that next step.
Yes, I was going to say at Wells Fargo, we have 3 pillars that we drive: small business growth, financial health, and housing affordability. So we do a lot of seminars internally. We bring in external speakers. All of our employees get to participate. They're invited, but ultimately it's making sure that people know like the so what of it. So what does that mean for you? So you brought up, Aaron, the issue of mortgage. A lot of people say, I live in a high cost market, I can't afford it. And I always say, all banks that take deposits, they have CRA, that's called Community Reinvestment Act. We are required to ensure that in low income neighborhoods, if you're buying a home in a low income neighborhood, or you qualify based on guidelines, that we have a lot of products to make homeownership possible. So you can actually buy a home with 3% down. You don't need 20%. There are programs where you can save money for the down payment and get those dollars that you save matched 3 to 1, so that very quickly you can accelerate your down payment so you can get a home. I mean, there are these programs that exist, but if people don't know, they're not using them, and they just get stuck in the system thinking that their financial goals are impossible to reach, which is not true. So the more that we can get the word out, the more that we can get it out in a variety of languages and through a variety of channels, the more I think people get empowered and get, they can see the light at the end of the tunnel, that there is a way, and it may not be as difficult as they may have imagined. So thanks for bringing that up, Aaron.
Thanks, Jenny. Anita,
Yeah, I think though, and Jenny, and I think we might, did we lose Aaron? But I think
Brian might have dropped.
Okay, I thought I saw somebody disappear. So I think that also there are systemic issues that obviously need to, come out. So if you look at 73% of African-American households and 70% of Latinx households don't have a couple of months of saving, and that they typically fall into the low to moderate income bandwidth, where they're making, less than $50,000 a year. And 33% of African Americans are unbanked, and 31% of Latinx are unbanked. And 1 out of 3 have a subprime credit score. We're talking about systemic issues that the banks, through many of their programs, are trying to address, but there are also workplace issues. So this is part of a population where, you take COVID and lay that on top of it, and the Latinx workers have been impacted. 60%, I think, or more have actually experienced a wage or job loss as a result of COVID. So now you've got employers trying to figure out what can I do? What should I do? And then you say, how do I have this conversation in the workplace? Well, last week I did a presentation to there's a bunch of CHROs, and afterwards a CHRO hit me up on LinkedIn and said, I've got to talk to you. I run HR, but I'm in trouble. I need somebody I can talk to. I go and I have kids. I'm now a single mom. It was a domestic abuse situation. She's in trouble with debt. She said, the last thing I'm going to do is share this in my workplace with anybody. Can you help put me into somebody who can help me? Now, I think that that's probably an example where it's an executive. But I also shared in that same talk that a stat that might surprise you, but 28% of people making more than $168,000 are living paycheck to paycheck. So it's across a continuum, but it's a very different response. So when I shared that $168,000 number, it was judgment. there's certainly something, it was like your credit score and the way you use money translates into your character. And it's unintentional. But I think it's a mindset and behavior challenge where we could learn a lot from the way the DEI professionals approach this. So maybe the first thing we need to do to address what Erin's raising around money is taboo in the workplace. You're not going to talk about it, but we all have debt, maybe except for Dave Ramsey, maybe, but we all have debt, right? and it's credit card debt or student loan debt, or maybe I have to take care of my aging parents and my own family. The situations are really quite different. Or maybe I'm part of that population I just described that has been historically marginalized, and now COVID has put even more difficult layers on top of that. So maybe the first thing that we can do as leadership addressing this crisis is to listen. You know, there are lots of CEOs. PwC has a great example of this, by the way. I hope Erin's back on, but they have something that they call the CEO Action for Diversity and Inclusion. And it's CEOs who are signing a pledge to lean in around these issues, who are saying, yes, we're going to change our corporate culture. We're going to discuss it openly. We're going to listen. And they're creating these these listening tours all around their company to demonstrate empathy and to kind of deal with the human side of the equation. And I think it was Erin who said, you know, we do pretty well on the D side, and now we need to look at the equity and inclusion sides of the equation as well. So maybe it's, you know, financial well-being is almost a DEI initiative in addition to being an HR initiative, because I think a lot of financial inclusion has so many different layers, social layers and historic layers, and, you know, access to capital layers that we need to address. So, you know, if only 7% of employees feel comfortable talking about financial stress with their employer, we've got a problem, right? Even though we know that 70% have been affected, 67% are feeling stressed, but only 7% of them are willing to admit it because they're afraid to admit it, because it's a reflection on character in many corporate cultures and in our society in general.
Yeah, thank you, Anita. And I agree. I think that is kind of the root of that challenge is, again, the stigma put on, you know, an individual with financial challenges. And, you know, like you've all said, introducing that into the workplace, a lot of people could figure, hey, that's going to affect my ability to, you know, be successful in my workplace, or how am I viewed in the workplace, and those kinds of things. Erin, I wanted to shift a little bit to financial inclusion within communities, because that's a similar challenge that is out there. And, you know, organizations likely may want to try to address or help with those kinds of issues that people are having in their communities, not only personal, but within where they live and who they interact with. What can organizations do to address financial inclusion within communities, and where would somebody start? Like, what's the first step?
I think the first step is going to be around first making sure that your communities are aware that the situation that they're in is in fact a problem. It is an anomaly. It shouldn't be the situation that they're in. And I say that because in my coaching work, I've worked with people who have literally said to me, I'll always be in debt. Going back to Anita's point, I'll always be in debt. And so it's like, I'll always be in debt. So why even deal with that? Why try to change that situation for myself if everyone's in debt and I'm always going to be that way? But that doesn't have to be the case. So I think one of the things that we have to do is to make sure that the community understands that things don't have to be the way they are. There is a better outlook, and that they can, in fact, achieve it. Because I think that one of the things that we've been seeing in this country over the last several months is the lack of hope. People just don't believe that things can get better, and that frustration is bubbling out in so many ways. But once we teach people and help them understand that first they can be hopeful that they can have a better financial life, and then teach them some of the tools that they can use to achieve that better financial life, then we start seeing things change from the beginning. So a classic example is that we all are aware that white men tend to earn more than people of color or women. And one of the things that they find in study after study is simply that white men typically ask for more when they get a job offer, and people of color and women tend to accept the offer. And so we start out on what is an uneven playing field when it comes to our income, and that the impact of that just continues to grow and separate us over time. So teaching people that things can be better, giving them hope that they can do better, and then helping people in the community understand that they actually deserve to do better is one of the things that I think that once we get that in place, the education piece around the specific tools, the negotiation tips, the banking products that are available to them, how to invest their fund, all of those things become a whole lot easier for a person to grasp once they make the commitment that, okay, I think this can happen. I know what a vision of the future looks like, and I understand that I deserve to be there as well. That makes everything easier, in my opinion.
Thanks, Aaron. And then Brian, we have you back. So welcome back.
Thank you. Can you hear me?
I know your role went from a D&I role into supply chain role. And I think that gives you a different perspective on kind of the broader picture of financial inclusion and how companies should be looking at that. Can you talk a little bit about that journey from where you were at to where you are now and how you're now looking at financial inclusion within HPE?
Sure. Can you hear me okay?
Yep, coming in good.
Awesome. Yes, thank you. I love what Aaron said earlier about we focus more on the D than the I. And typically when we talk about the diversity and inclusion programs, particularly what we're going through now in Silicon Valley, it's very much about that D, about representation, right? Whether you're talking about the big six, women in leadership, ethnic minorities, right? And it's very important to measure representation, because what gets measured gets done, but that has this necessarily effect of making us focus more on the numbers than creating the environment of inclusion, which if done right, that the numbers naturally follow. And it goes beyond our workforces. And that's an area where I have the opportunity to kind of focus over several years. But now my focus is more on that community piece and social impact piece. And certainly a part of that is our supply chain diversity, right? It's focusing on those underrepresented businesses that could be participating in our own supply chains. And my company is no different. All enterprises have some level of focus on taking a proportion of their procurement spend and ensuring that underrepresented businesses have an opportunity to kind of compete for that. And it could be about where we're spending our dollars, or if our supply chains are limited and opportunities are limited, it could certainly be about what we do to help kind of mentor and provide financing facilities to, or training and development to these smaller businesses in our supply chains. And even for those micro businesses that Jenny mentioned, maybe they're not ready to do business with a big corporation, but we could pull them into our employee discount programs or mentoring programs to help to grow their capacity. And so it's been an interesting transition into this space. I think it's an area where we as employers have an opportunity to make an impact. It may go beyond the work of the HR department into the procurement departments, but focusing on those smaller enterprises and micro enterprises has this knock-on effect of being able to continue to contribute wealth in communities of color. There's like this natural impact of you're putting dollars not only into the hands of those owners of those smaller businesses, but there's a ripple effect where dollars then go into those traditionally underserved communities. So definitely a clear area of focus for all of us.
Thank you, Brian. And Jenny, this kind of leads into an area you're, obviously dealing with small businesses, been hit extremely hard by, the COVID shutdowns and those kinds of things. And now, can you talk a little bit about, what you're doing with small businesses and how financial institutions can help with the financial inclusion of those small businesses, make sure they stay up and running and maybe even focus a little bit on the minority owned businesses?
Sure. So we, when COVID happened, we started to see that smaller businesses, the micro businesses, women, diverse people were not accessing the program in equal share. So we made a decision that we were going to focus on our PPP lending on smaller businesses, under 50 employees. And so when we closed out the program, we realized that our average loan for PPP was $57,000. So it was going to smaller businesses. As a result, we also made another commitment, which was we were going to donate all the fees that we generated from doing that PPP lending. We were donating all of that to communities to support diverse entrepreneurs because they were the hardest hit. So what we designed was something that I feel is very responsive, that will help bring more financial inclusion and really build resilient businesses over time. So what happened with the money, how we allocated, $250 million was developed and earmarked for capital to small businesses. And that could be new loans priced at no higher than 3% interest. We would prefer it to be closer to 0, but we capped it at 3. We are letting small businesses do interest rate buy downs, loan forgiveness if that's what they need. We're allowing them to have grants if that's what they need. So that money is very flexible. And for the money that's being lent has a lot of leverage on it because the entities that are receiving the money, they're called community development financial institutions. They don't have to pay it back to us. So it acts as equity on their balance sheet. So we know that money will circulate many times over. So that was the first tranche of money we put out, the 250 million. We just launched another program. It's a $50 million initiative for technical assistance, working through a variety of chambers and organizations that reach deeply into communities, so that these entrepreneurs have access to quality mentorship and coaching that they need to navigate this economic reality. Because I think giving money to somebody is part one, and then giving them quality information, guiding them so that they use the dollars in ways that are meaningful is important. And then down the line in early 2021, we'll put $100 million behind what we call recovery and resiliency. And this is really looking at building ecosystems in key markets to ensure that there's an infrastructure there to support small businesses as they go through this recovery process, whether it's investing in technology that they'll need to ensure that they have access to markets through their digital. We're focusing on reimagining what products should look like. Currently, the way banks are looking at lending, right? We look at their cash flow, but what is happening with this economy that's up and down is there's so much income volatility. And so there are a lot of new products that are popping up to really address the needs of businesses where that is happening so that we can understand risk differently. So we are trying to build this whole capacity in communities so that we can serve businesses where they're at, because we have to reimagine. I always say, we have to reimagine the future of finance. It can't be the same models we used in the 1970s because we're in a completely different stage. And COVID is not the last, disaster we face. We have climate change, and that changes everything. In California, we are literally on fire every other weekend, it feels like. And so what do we do there? Like, what is the risk there? How do we help communities, small businesses be able to have the resiliency to bounce back from that should they be affected by it? And I think at some point we all will be affected by climate change. So we have to think ahead and plan for that. So that's what we're doing.
Yes.
Thank you, Jenny. Anita?
Mike, there's a parallel to what Jenny is describing. There's a parallel in the employer's world. So if you think about what Erin has said in terms of providing coaching, providing access to curriculum, providing access to information, what we have done is we're a social purpose organization at Salary Finance. So the first thing that we did was remove all costs associated with our benefits. So any company can implement any part of our program for free for their employees. Because again, we're driven more like a nonprofit in terms of trying to push forward social purpose. And what we do is we start with a free report that essentially tells you what the financial stress is in your organization. So you'll be able to take a quick look at, how many of your employees declared bankruptcy last year, or how many are 120 days late on their credit cards. I mean, what does that look like? Of course, it's anonymized and you can't really tell, but the idea is that you, much like any other program, have a diagnostic tool now that will give you an indicator, a baseline of where you are as an organization and how big is the issue of financial stress. So it gives HR professionals a starting point of what's the financial fitness of my company look like? And then we do the same thing for individuals. Where's your financial fitness? And we tie it back to a journey of well-being on a continuum of about 5, from people who are struggling to people who are prospering. And each one of those stages has different interventions. Like Erin said, stage 1, I'm struggling. I don't even know what to do. I really need a coach who's helping me. But coaching isn't going to help with access to capital. So it will help direct people there. But if we were to break down access to capital, my big soapbox is at the heart of social injustice is economic injustice. And Brian, you and I could have like a field day talking about that. It'd be another 2-hour discussion, because I think we have to get to the root of this issue, as Jenny's doing with small businesses, right? People, and somebody made a comment to us, like, it is about getting equal access to capital. It's not about driving those LMI folks to a 391% interest rate from a payday lender because they don't have access to capital that's affordable. So we're flipping the model with employers and saying, there's a new payment scheme and it's called a salary link. And it's a mechanism that allows people to access their salaries, allows us to drive down interest rates on capital and provide affordable capital to individuals who are marginalized, who aren't going to be able to go, God bless you, Jenny, but aren't going to be able to go to Wells Fargo with a 540 credit score and get access to, a few $1,000s to repair their car that they need to get to work. So we've carved out this segment of the population that's been marginalized and vulnerable. And at the same time, we can help that executive I talked about, where she can still maintain dignity, still borrow against her salary, get herself out of her difficult debt, and then build that back in with people like Aaron with the PwC team, that it comes back to a coaching model. It's back to resiliency. It's back to what Jenny said around mentoring and helping people. It is exactly the same parallel between individuals who are running those businesses, the supply chain Brian's talking about, and the individuals in workplaces that Aaron and I are working with. So how do we remove those obstacles? How do we create a better place? And then how do people get that return on investment? And in many ways, for those that are marginalized, how do they use themselves? I call it the bank of you. How do I use my own sort of bank and move myself to a better place where instead of paying 391%, I'm paying 11% in interest rate on capital? That gets people to a better financial position. Then we coach them back up. So you've got to have the tools in place that are going to move the needle so that the coach can tap into that and say, oh, you need help with that. You need help with savings. It is a holistic approach to resilience, whether it's a small business person looking for capital, or Brian's supply chain looking for help, or mine and Aaron's employees, looking for help. And in our case, driven by purpose, we just said, I don't want to have to tell an HR person this costs anything. So we've removed any fees and we just come in as a voluntary employment benefit. And hopefully we can scale financial dignity and social justice and economic justice all at the same time. But those of you who know me know that I'm entirely optimistic and full of hope around this issue. So
Anita, can I ask in that framework, how often, or where's the balance between the need for coaching and other programs and infrastructure, and maybe this company just has the wrong compensation structure and maybe I just need to be paying my employers more? Is there a connection there and a balance?
Yeah, absolutely. So even in that diagnostic, when you look at that tool and you realize where people are, you can map that against what your compensation looks like. And of course, ours is highly skewed, as you might suspect, Brian, toward low to moderate income, because that's where people don't have access. That's where those 590 credit scores come in, and don't have access to capital. And that's generally aligned with lower income. But we've changed the underwriting model so that when we originate loans, it's based on things like tenure and behavioral economics and FICO scores, the last decisioning piece. So we can fill in the gap that a Wells Fargo may or may not be able to do, even in their best opportunities with CRA. So we partner with the banks. We're partnering to fill in a gap. So when Jenny's folks can't do something, they partner with us on it. So yeah, of course, there's an income correlation and and regulations that permit it, but when you're borrowing from yourself, it's a different kind of a situation.
So Brian,
and I also think that
I was going to say the issue you brought up about income and whether that's is that the issue? We did a lot of when I was a different bank. We did this thing called financial diaries, following low-income people around just to see how they live. They are some of the best budgeters you will ever meet. Like, you're making $25,000 a year, raising a family, and you're paying your rent and buying food. And so sometimes we have to get underneath our own assumptions about what is really the issue here, and are we solving for the right thing?
Right.
Because that is a major. If you have 3 jobs and you still make $25,000, I would posit that is a problem structurally with how we're paying our people. So great point that you're bringing up.
Yeah, and financial diaries, Jenny, that's a really good point, because they showed that it was certain times of the year. So back to school, was a cash flow issue. Holidays were a cash flow issue. So if people could just borrow to manage through the cash flow issues, they would be in a better position economically, but they had to go to alternative sources to get that and then found themselves short. I encourage everybody, I use your data all the time. I encourage everybody to read the financial diaries because it also reflected in COVID in March. Credit score, would it surprise you guys know credit score, not credit score, credit card usage has declined this year, except in March. And it accelerated in March primarily with LMI folks who were concerned about what's going on the rest of the year. So you can see all kinds of correlations that are driven mostly around this LMI issue, Brian, but Jenny is right. They figure there's masterful. LMI folks are masterful at the math of poverty.
And I just think that along with what both of you are saying, that to me, it still comes down to the issue of education, and that, yes, they know how to budget and they know how to stretch a dollar, but when it comes time to access capital, they don't necessarily know what their options are. So we see people taking out those high interest rate payday loans because they don't know that there are other options. We see people buying cars at buy here, pay here places where they're paying 35% annual interest on a vehicle loan, even in strong economic times, because they don't understand that their credit score would actually allow for them to apply for and receive an auto loan from a lender that is a little more reputable and higher up the chain, which will give them a better interest rate. So I think, again, a lot of what we're saying, if in my opinion, if we're looking at the root of the issue, it becomes making sure that people understand what their options are. First, again, that the situation is not normal, right? Their situation could be better. And then making sure that they have access to some sort of resource, whether it's a human coach, whether it's a digital solution, something that will let them know that there are options out there. These are the ones that you may want to pursue. And if you pursue one of these, then you can use your savings to do other things, which will make that $25,000 budget that Jenny was talking about stretch a little bit farther, because less of it's going to interest and more of it is going to fulfilling their needs.
Yeah, we're finding, Erin, that people are saving about $1,100 in interest. So to your point about the $400, Jenny, if you could put $1,100 back into your account, that is life-changing in many ways, right? But the education piece speaks to resilience. And if we're going to leave this talk with anything, I would hope we would leave it with the resilience piece. So each one of us has, programs that we have in place, but we really do need to get to that piece around, social justice, economic justice, and a resilient population, financially resilient population. And how do we get there? So I think, for me, that's what I see for 2021.
Thank you, Anita. We are out of time. This has been a fantastic conversation. You all made my job extremely easy with your transparent views and your thoughts and interactions. So I really appreciate you joining us today. Next week, we have a session on Friday, as well as one on the 23rd. And October 28th, we have a special session around the election. And it's not a political type discussion. It's more about what does your organization need to do to be ready for the impact of what an election might be. So again, thank you, Jenny, Anita, Erin, and Brian for joining us today. And hope you all have a fantastic weekend.
Thank you, everybody. I'll see you soon. Bye.
Thanks, everyone. Bye.
Thanks. Bye.